The economic outlook continues to support risk assets. The global recovery remains intact as vaccinations limit new lockdowns. Almost all the major central banks, including the Federal Reserve, remain dovish. Thus, policymakers are willing to tolerate inflation running temporarily above their 2% targets as economies reopen. And government bond yields remain very low by historic standards. The global recovery from the pandemic, however, faces fresh tests. The first is from near-term shocks to growth in the world's two largest economies. In the US, the spread of the Delta variant, labour shortages and supply bottlenecks have halted the economy's reopening in Q3 21. We thus revised down our 2021 GDP growth forecast from 6.8% to a still very strong 5.9%. Similarly, in China, economic activity has also been curbed during Q3 21. There have been outbreaks of the Delta variant, as well as floods, power shortages, slower credit growth, and regulatory restraints on property developers. We thus trim our 2021 GDP forecasts for China's growth from 8.2% to 7.9%. But despite the downgrades, we still project global growth to remain strong this year and next year to the benefit of risk assets. The other key risk to the global recovery comes from government bond yields starting to increase again. Since the middle of September, yields have surged, with 10-year treasuries exceeding 1.5% for the first time since June. Yields are rising as the Fed is preparing to taper its quantitative easing before the end of the year. But we don't expect 10-year treasury yields will exceed 2% over the next 12 months. The Fed is still likely to take another 2 years before it starts increasing interest rates. Thus, treasury yields are set to keep trading at historically low levels despite their current volatility. In short, the favourable outlook of global recovery, dovish central banks, and low government bond yields remains intact. There are near-term risks to growth in the US and China, and treasury yields are becoming more volatile as the Fed prepares to taper its quantitative easing. But the economic outlook overall continues to be supportive of risk assets. For more information, please read the latest edition of our monthly investment guide titled The Final Countdown.